The JSE performed well in the first month of the year, reaching all-time highs as we indicated in last week's episode. The all-share index returned 6.9% for the month, supported by strong performance in the industrial metals and mining index, which rallied to return 9.4%. Naspers and Prosus, which make up 21% of the all-share index, also rallied this month, returning 12%. This was all driven by China as the country pivoted from their zero-COVID policy. The industrial metals and mining index declined over the first few days of February as constituent companies reported weak operational updates. The Absa Manufacturing PMI is a monthly survey of purchasing managers in South Africa's manufacturing sector. The index provides leading indications of business conditions in the sector. A reading above 50% indicates that the manufacturing economy is generally expanding. Below 50% indicates that it is generally declining. The manufacturing sector reported an expansion in January despite high levels of load shedding and high levels of unemployment. This is encouraging. Absa indicated that continued activity growth would require a sustained improvement in demand and a move to less intense stages of load shedding. NAMSA reported new vehicle sales data this week. Local sales showed some growth compared to January 2022. However, exports declined. This is not surprising given the issues Transnet has been facing. Toyota sold the most vehicles, followed by VW. One can have a look at this data for investments in listed South African car dealer motors. The South African market would be a small constituent of the larger manufacturers. We had a number of companies publishing operational updates this week. Pepco released their Q3 trading update for the 3 months ended 31 December 2022. Like some of the retailers we've heard from last week, their sales numbers were weaker than expected. The 6.5% growth in group sales supported by newly acquired Avendia. The like-for-like sales growth, this number has been adjusted for acquisitions, for the group declined by 1.5%, which is weak for a festive season not impacted by COVID. Trading was impacted by load shedding, which has been theme amongst most businesses that are struggling with this burden. Pepco managed to keep 70% of their stores open. Shoprite released an operational update for the 6 months ended 1 January 2023. They reported group sales growth of 16.8%. The best performing division was the supermarket. Similar to Pepco, furniture was subdued, but unlike Pepco, the division still experienced positive sales growth. Shoprite's management indicated that load shedding cost the business 560 million rands, around 10% reduction in net profit despite having reported strong sales growth. All retailers are affected by the pressure consumers are feeling at the moment, but Shoprite seems to have done better than peers in this period. A few mining companies also published their operational updates this week. The key theme, given the Chinese zero-COVID policy, Transnet issues, and other company-specific issues last year, is weak volumes. Anglo American reported their fourth quarter production report for the third month, or rather, the 3 months ended 31 December 2022. Production increased by 10% compared to the fourth quarter in 2021. The production was roughly similar to what market participants expected. Management kept the guidance to the market the same, so no major surprises here. Investors will be looking forward to what the company can deliver in future. Kumba Iron Ore, a subsidiary of Anglo American, also published their fourth quarter production and sales update. The company indicated that they expected lower earnings per share due to lower average export ore prices that they realized over the period, as well as lower sales volumes. Earnings are expected to be between 38% and 44% lower for the full year, after reporting a 9% decline in sales volumes and 8% decline in production volume for the year. Glencore, on the other hand, reported group production that was 7% lower than the 2021 financial year. Production was lower year on year due to a number of different factors, including wet weather and constraints at one of their copper mines. Cobalt was the only metal that saw large increases in production volumes. Remember that the most important thing about company-specific information is that as an investor, you need to understand where these companies are based on their historical information that they have reported now. Then you need to use the themes that we have discussed to think about where these companies can go in future. For example, the clear theme for industrial mining companies, as we've discussed in this video and other episodes, is the Chinese reopening. We have seen that play out in the month of January. This brings us to the end of the first part of This Week in Markets, episode 3. I am Billy. All thanks to Zoe and the team. We will meet again next week.